You're tuned in to Agriculture Today, and we start our Friday show with the grain market update with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, we're around corn harvest right now, and we're not seeing the lows we usually do. And why is that?
Well, in September, when the main focus of the market was on the size of the crop, that we had uh, the USDA report came out and showed 183 bushel plus corn yields, by far a record, and also for soybean yields 53 bushel plus. So, and really now what we're doing as we speak, we're at the end of the time period when the USDA NASS has gone out into the fields with their own enumerators to look at test plots to bring information in that they'll bring into that crop production report on October the 11th coming up. So that's really the next, really, as far as USDA supply demand data, that's the next bit of that information that'll be coming into the market. So possibility of a fair amount of volatility, and we have heard mixed reports on yields. Some places astoundingly good, others more mixed. It really so much depends on where you're at. So still uncertainty in the USDA track record, even their own published track record. They talk about how changes can occur, and so that's an issue. And if that was the only thing that we were dealing with, just the size of the crops, then we'd kind of slowly languish our way off into harvest lows, and that are just pictured in our minds by trucks lined up at elevators or outside of different receiving points or on the farm, filling grain bins, and with that great volume of grain around for corn, soybeans, sorghum, sunflowers, you name it, and other Kansas crops, we would see a lot of pressure on prices. At least the basis would widen out, just because we're trying to manage storage space. But we have some other issues that have come in the last several weeks that have added questions into the market, and I can think of several of them. Domestically, of course we have had a dock strike, adding questions to, at least in the grain markets, how much will that affect us? So we can come back and talk about that. We've had this major storm, Helena, in Helena, whichever, the one that hit Florida, Georgia, North Carolina, other Tennessee, other of those states, which caused a lot of infrastructure damage. We talk about that a little bit, and then we have these overseas issues that are ongoing. In the case of the Black Sea region, it's a hot war. It's a shooting war, and that added to drought in those areas is diminishing the supplies available of wheat to the markets, and that are coming out, and adding support to wheat prices. And now the Middle East conflict, dealing with the Israel, Hamas, Iran, other players, adding fear in the energy markets, that if that conflict broadens, that we could see a disruption of oil supplies. And now, when you see how much in the United States for corn, for soybeans, and canola, other crops that were dependent on bioenergy production, so now if there's a run up in or any type of a spike in the oil market, in the energy markets, for petroleum, that comes back on the biofuel side and adds a lot, and could add a lot of support, a lot of demand coming in for on the U.S. side, I guess, for that, with the nation, frankly, looking towards biofuels to make up the difference for any, at least temporary disruptions in oil supplies coming in. So we'll see. I just want to go back and mention one or two of those things on the. With regard to the port strike, still unresolved as we speak on this, at least or at least if there is an agreement that comes about. It's not signed yet. We'll see what happens. Things can always change the last second, but it's thought to be more of an issue with container shipments, than it is for bulk grain. Still, disruptions of one type or another, not so much of a problem, I think, in the Pacific Northwest. I think there was a similar strike that was happening up in Canada, Vancouver area, and supposedly that one's resolved. But for anything going to the Gulf, to parts of the East and West Coast, then you have this potential disruption. Of course, a lot of our grain, if it doesn't go to the Pacific Northwest, it's going down the Gulf generally, or by rail into Mexico. Mexico's a huge buyer. So as we had seen reports of how the price of rail transportation in anticipation of this strike and now living it is also being affected. So that whole transportation system gets disrupted to some degree. So we'll see. By the time we get into the very heart of harvest, if we're not able to move grain freely down the river system or elsewhere, then yeah, that would add even more to harvest lows. So you got that. And then the hurricane that's come in and has really damaged any unharvested crops that are in the field, or if they were in a grain bin, heaven forbid, that that had had the bottom affected by rising water levels, then you've got a lot of spoilage, a lot of disruption. I haven't heard anybody talk a lot. Well, I've heard some discussion about livestock facilities being impacted, and in Georgia, 100 some poultry units, and of course North Carolina is a major livestock contract livestock production area too. But I've heard no discussion of that. So, and any grain that would I guess the ability to move grain in or out of that area, and in the Carolinas, I think it's mainly going in, to keep the livestock feeding facilities going is a real issue. So we'll see. Um, I I had understood that about 70% of the crops in North Carolina, Tennessee were already harvested. So you got the back half of that. Whether they can now move that into channels will be an issue. So you got that. To go back and talk about the Black Sea region issue. Um, as you had mentioned just a few minutes ago, uh, that dry conditions are leading at least Russia to state that they're looking at constraining some of their export numbers. Of course, they've had a run of several years in a row of tremendous crops, and some of the land that was in contention in that war, they've in the Donbas areas, I think is I believe that's how it's pronounced. They have expanded into those areas for their national crop production. So got all that going on, but Russia for a good while has been able to sell wheat at I wouldn't say fire sale levels, but definitely by their location, lower prices, able to kind of dominate that market. Well, now they've got a drought, much less everything else that's going on, and reports in the last several days of Russia via drone attacks coming at or doing damage to the port of Odessa, which is the key primary port location for shipping for Ukraine. So nothing getting easier over there in terms of keeping wheat going. And finally, in the Black Sea area, we'd mentioned that just a little bit ago. Yeah, I don't know yet that you have. It doesn't sound like we've, with everything else that's been attacked back there. I don't know that they've seen damage, at least as we speak, to any energy facilities. But if that happens, that could cause a lot of volatility, a lot of uncertainty to come into world oil markets, and would come right back in to the to affect U.S. agriculture with to the degree that any shortfalls in exports or spikes in prices that would occur in that part of the world would come back and affect biodiesel, renewable diesel, ethanol production. So ethanol productivity, ethanol profitability has been really very, very good for a good while because of cheap corn prices. Well, if in this situation, you'd see ethanol prices move higher as well as moderate corn prices, as probably at least moderately higher corn prices. So, um, I think these issues are important to Kansas farmers as they're out in the fields and pulling the harvest in, making decisions whether to sell at harvest or to store. Some of the prices they've seen in a little bit less bit of time have come up 30, 40 cents. Maybe that's if it ties in with cash flow needs, probably an opportunity to sell. Uh, and but we have other issues of these other issues afoot may they at least add the likelihood of more riskiness in coming months in the market. And the the normal things that we're worried about, drought in Brazil, that's still out there. The things we've mentioned haven't even are have now taken front front and center attention in the markets, whereas we're still wondering about delayed planting and extremely dry conditions in parts of South America that are our main export competitors. So, you know, this isn't the docile harvest period where we just wonder, oh, what in the world do we ever do with this grain? That's not the situation that we're in. Now we've been kind of blessed in a lot of areas with a pretty good crop and are wondering what in the world's happening, or what may happen in these international financial, energy, and agricultural markets that could affect our returns to storage. So we'll see. We'll see where we go in coming days and months.
And Dan, just real fast as we round out today's show, with all these concerns domestically and internationally, can you run us through prices?
Yes, just real quickly. Um, Yesterday, Thursday, October the 3rd, Dees corn closed at 428 and a quarter, and that's up about 20 cents or so from where we had been. There were times we were at 4 or below. November soybeans, 1046, and again that's up a fair amount from where we had been. Even wheat is now at trading at 611 and a half. That's what it closed on at yesterday for Kansas City wheat, and that's markedly higher than where we'd been of late. So that's moderately reflective of these risks. And it's reflective of risks that haven't hit home yet. It's the fear of them coming. So got that. And cash prices haven't changed a lot from where we've been in the past, other than you do see a spot cash price in Southwest Kansas, Garden City area, 473, and we've been markedly lower than that here of late. Even wheat prices now, you've got an over $6 cash wheat price in the Hutchinson area, and we've been far lower than that here in recent weeks.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.